Hi everyone, Donna here with Bookkeeping Made Simple, and today we're going to talk about budgets. Yes, I know, it's a dirty word. So before I get started, I want to welcome you to the Bookkeeping Made Simple show, where we talk about everything to do with business, everything from health and wellness and mindset to how to start a business, how to market your business, and accounting, payroll, and tax. And I talk about the money side for a couple of reasons. Number one, I'm an accountant. This is what I do for a living. I help people organize their money so that they can make plans with it. And I also help them plan with it. I am a QuickBooks Elite Level Pro Advisor. My company is, and I hold an MBA, and I'm almost done with the master's degree in accounting. So this is really, something that I enjoy. Interestingly enough, I started off with pursuing a degree in computer science, but then I went and got married and had kids and got divorced and got married and moved to Germany and had more kids and came back, and the entire field had changed and I couldn't ever catch back up with it. That's a field that moves very quickly. So I decided to work in accounting, where I'm still working with less so with algorithms, but it's still kind of the same thing. I find it very similar, not similar to coding, which is more like linguistics, but I find it very similar to creating algorithms. So I really, really enjoy it. So budgeting, let's start off with discussing what a budget is, because much like a diet, it gets a bad rap. People think of budget and they think of negative things, just like with a diet. If you think of someone going on a diet, what you hear is, I can't eat this, I can't eat that, I can't drink this, and I can't do that. And there's some truth to that. But really what we're looking for is a spending plan or an eating plan in the case of a diet. You're just going to plan ahead. And it's really tricky for a lot of people because a lot of people don't know how to plan ahead. So I'm going to talk about how to set up a budget for your business. You can do the same thing with your personal. I will say that I've always budgeted my money on a personal level very differently than I budget it for my business. But the whole point, again, of setting up a budget in your business is most of us have busy periods and slower periods. So we want to make sure that we are prepared for the slower periods by using the time when we're really busy. We're going to have big months. For example, a lot of retailers, from Thanksgiving to Christmas is their biggest time of year. So if they're smart, they will use that time to kind of help them along when things are much slower, like in January. My daughter-in-law recently told me, just a couple of days ago, that's how recent, her family has owned businesses for years. She's been involved with them literally since she was 8 years old. And at the ripe old age of 20, she informed me that you never make business decisions in January, because January is a tough month for a lot of businesses. Christmas is over. There's kind of a lull. It feels like there's a lull everywhere, at least for me, unless you're in snow removal in the north. It does feel like, at least for me and for most of my clients, there's a lull. People aren't building. People aren't renovating. They're recovering from Christmas. It's just not a lot happens in January. I'm really busy in January, but it's not a big revenue month, because in January is when I'm really preparing for tax season. Oh, which, by the way, starts today. So I'll have some links about taxes in my descriptions. So we want to make sure that we understand the point of a budget. Again, it's a spending plan. If you're in business, you already know you're going to have busy seasons, you're going to have slower seasons. You're going to have seasons, like I said, January is a lot of preparation time for me, but a little bit lower in revenue. And then February and March are really big revenue months. July and August, interestingly enough, are big revenue months. So I know that there's some seasonality. I also know that there's a core of my business, the bookkeeping side, is an ongoing monthly subscription. So that is kind of my core. And then the tax preparation funds, really, I use those to kind of smooth out when things are a little bit rough financially. So here's what you're trying to do. You're trying to be sure that you're very efficient with your money. You want to make sure that you are reaching your goals in your business. For example, if you want to have a 6-figure business, you need to, and you're starting from scratch, you need to know how to plan for that. If you're trying to reach 7 figures, same thing. You need to know how to plan for that. You also need to know if you have, like for me, for tax season, I want to take that extra money and I want to put it aside for slower months. You also want to know how much do you need to sell to become profitable? That's a big one. And you also want to, kind of look at the seasonality of your business and prepare for slow months. You want to prepare for any unexpected expenses that may come up. So that's the whole point. We want to know and think ahead about where our money should be going. A lot of people get stressed about money. It's always interesting to me because there's so much emotion that's attached to money. I've said before on this channel, although it's been a while, money is the value that's been placed on a good or service that you have provided to someone else. So if you're in the business of selling products, you are placing a value on that, which is a reward for selling your products. If you're providing a service, it's the same thing. Now it gets really, like I said, people can use money to control other people. I've seen that a lot. I've been the victim of that, particularly in dysfunctional family relationships. One partner may control the purse strings so that the other partner can't leave. So there's a lot of emotionality around money because it is so required in our society, and because really people look and value other people by their bank accounts, whether you like it or not. I don't think that's true value, especially as a woman and a mother. I've done a lot of work that was highly valuable but was unpaid, still do. But honestly, that's part of the reason it's so fraught with emotion. It is such a requirement. We can't do anything in our society without money. And so we look at people with a lot of money and we place a higher value on them than we do people with not much money. And that's just the way it works. So the first thing you want to do is you want to look at your revenue. We're looking to see where your big months are and where your small months are. So like I said, in my business, January is usually kind of an average month, but February and March are usually pretty big as far as revenue. So you want to take a look at your existing business. You want to go back and look over maybe the past year and see how much revenue do you have and where is it coming from. In my own business, I have a couple of sectors of my business or segments that I track. One is the monthly bookkeeping subscription that we offer. We do bookkeeping and accounting for small businesses. So we do that as a subscription level business. We charge a flat rate. We customize that rate to the business. And we are very specific about what we do for that rate. So you want to look and see how your monthly income changes. If you were ever in a salaried position, you may have gotten used to that idea of you get a salary every month. Business usually isn't like that. if you've never owned a business before, business usually isn't like that. You're going to have busy months and slow months, and you're going to need to make sure that you are accounting for that. You're looking for seasonal patterns. Like I said, most people have a slump right after the holidays. And then if you're in construction, you may work 24 hours a day over the summer, and then nothing in the wintertime, depending on where you are and what the weather's like. So you want to kind of see what your patterns are. Then you can use those historic numbers to start making some projections. Now, you're calculating your revenue at this point. You want to know, what did you sell? There's a couple of ways you can look at that too. We have accrual-based accounting, which is considered by far the most accurate, but that counts your revenue when you earn it. So when you provide a service and you generate an invoice and you send it off to your client, even though they haven't paid it yet, that is considered earned. As opposed to cash basis, which would be, you would count that revenue when it lands in your checking account. I prefer accrual when I'm doing my budgeting, although I do also look quite a bit at cash as well. So now we're going to look at fixed costs. So the first thing we're going to do is we're going to look at our revenue. We're going to look at our revenue over the whole year. We're going to look for any seasonal patterns. This is the top line revenue. We're going to look at what sectors are doing better certain times of the year. Like I said, during tax season, my income tax business is really busy. And the rest of the year, it's pretty much non-existent. So we want to kind of take that into account. And the next step is we want to look at our fixed costs. Okay. So there's a couple of different costs in business. One is fixed costs. This is things like rent. Your rent, probably not going to change. Any debt repayments is probably pretty fixed. It's not going to change based on the volume of your business. Salaries, your salary expense is probably not going to change much unless you hire someone new. And then that's kind of a fixed expense that kind of takes a big step. So that can be a little bit on the complicated side. Depreciation. Yes, we do want to. Depreciation is a little bit tricky. Depreciation is a non-cash expense, but we still want to count it in the budget. And we also want to make sure that, property taxes, most taxes are fairly fixed as well. Property taxes are, so we want to make sure that we're accounting for that. The next one is the variable expenses. Variable expenses change according to the number of hours you work in service, or the number of clients you have, or the numbers of widgets you produce. Variable expenses will change. So that would be things like, if I'm providing QuickBooks, I've stopped doing this because of this, but QuickBooks subscriptions for my clients, if I'm paying for them, that's a variable cost, because that's going to change according to whether or not that client stays with me. Some others would be hourly wages. Another one would be an owner's salary. Your salary as the business owner is probably going to fluctuate with profit. Raw materials. So if you are a manufacturer, or you are or a retailer, the cost of your inventory may change depending on the season. So that's considered a variable cost. Utilities, they usually average out, but then again, if you are in an office and you are going from like a 12-hour day, you have people in the office 12 hours a day, and you decide you want a 24-hour day and work 2 shifts, that's going to change your revenue, or not your revenue, your utility costs. So you want to make sure that you're thinking this through. Some things are going to be the same no matter what, unless you make a big jump. Other things are going to depend on the number of clients you serve, the number of customers you have, the number of widgets you produce. Next, you want to make sure that you have something set aside for unexpected costs. Well, what does that mean? Well, no, if you have a piece of equipment that you use in your business and it breaks, you need to have money set aside to be able to fix it, because you can't not fix it for a number of reasons. One is failure to take care of it immediately often results in much higher repairs down the line. Also, you can't afford to have it down. Okay. One of my other companies is dump trucks, of all silly things. So we try to do a lot of maintenance really early on to make sure that we don't have problems. But then again, if we do have problems, we can't afford for those trucks to not be moving. That's how we earn our revenue. So we want to get those trucks back and on the road again as quickly as possible, so that we can make money. And then finally, you're going to start looking at your profit. Your profit is what's left after your revenue minus your cost of goods minus your expenses. This is called net income. And you want to, now keep in mind, you may not be profitable every month. You may have some months where you're negative, and you may have some months where you're positive. You also want to look at your cash flows as you're doing this. So you want to look and see what months are you profitable. See what you can do to even those out. And don't stress too much about losses, paper losses especially when your business is starting out. So you want to kind of look and see how things have gone over the years. And I might add, because I have been asked this, if you're just starting a business, expect to take about 5 years to become really profitable consistently. So if you're not profitable now, don't worry about that. This is not the time to worry about that. This is how to make sure that you are profitable. And then you can set up your budget. Now, QuickBooks has a budget in their software, and sometimes I use it, sometimes I don't. I use it mostly for the expenses, because I want to make sure that things like dues and subscriptions, I want to make sure that I'm paying as little for that as I can. I don't need to have, this is one of my frustrations, right? I was looking for something to help me with my workflow, and I already have Microsoft, and I have access to Microsoft Power Automate. I have a CRM that does a lot of automation. And then I was looking to find something that would like send out engagement letters at the beginning of tax season. Couldn't find anything. The only thing I found wanted $500 a month for it. I was like, well, that's not worth it. It's not worth $500 a month. And I already have 2 other ways of setting up automations without paying for their stuff. So that's some things that you want to kind of look at is, are you paying for duplicates? This is something as you're looking through and you're checking your costs. Are you paying for the same thing multiple times? Okay. So, and it is tricky because a lot of this software today seems to be trying to be all things to all people. So QuickBooks all of a sudden has a task manager. I don't think I like that. I prefer to have my tasks in my CRM. And the reason is, as the owner of the business, it's easier for me to go through at each client and see everything that's happened with that client in one place as far as communication and have tasks been done and that kind of thing. Now that you have your budget, now you know what you've historically spent and you've figured out what you want to spend in the future. The next thing, honestly, is to start looking at your costs. Like I said, you want to look at your software costs. Are you paying for the same thing over and over again. Okay. So, and it, like I said, there's so many different things. And I feel like they have Microsoft and they pay for Google, because some clients have Microsoft and some clients have Google. We may want to go through and see which ecosystem do you want to be in, and just use that one. I've also seen people who have multiple calendaring options. I know I do. One comes bundled with my Microsoft, another one comes bundled with my CRM, and I use the one for my CRM. So you want to kind of look and see, are you paying for the same thing multiple times, really? Are you paying for software that does exactly the same thing multiple times? So you want to start looking at that. Where can you cut back, especially on software and Office? Again, it's going to depend. This is my own personal experience. It is going to depend on your business. So you might need, if you're a mechanic shop, you might need a lot of 10mm wrenches because that's the most common one used in cars, right? You might need to have some multiples, but you also want to be aware of your spending. I feel like a lot of people, not just business owners, but people in general, they put things on autopilot and they don't think about it anymore. So we end up with paying for Netflix and Hulu and Disney Plus and Amazon Prime Video, and really they all have the same stuff. Honestly, most of them have exactly the same stuff. So you want to kind of look and see if there's a lot of redundancy, and if it is, you might want to start cutting back on that. You also are going to want to look at your debt repayments. So again, you may need to do a snowball method to reduce some of the leverage. You may be just fine with that. You're going to want to talk to your accountant or a CFO to see what you want to do with that. I don't recommend having so much leverage that you can't pay those bills off every month. My philosophy with credit cards is all that is to help give you another 30 days to pay. So you want to make sure that you can pay those off in 30 days. And you don't want to be carrying a balance. So that's just some things to think about. Once you have looked at that, and you can set all this up in QuickBooks, all the versions of QuickBooks allow for budgeting. And the number one thing I really, really would suggest is put money aside for unexpected expenses. People don't do that. They think they've covered everything. Remember, something that was always going to come up that you didn't count on. So have an emergency fund. Anyway, once you finalize your business budget in QuickBooks, now you can start running some reports, your budget versus your actuals. So that's going to tell you if you budgeted $200 a month for dues and subscriptions and you're paying $400, that should tell you there's something wrong here. Either that got recorded twice in QuickBooks, and that happens quite a bit, or you have redundancy, or you didn't budget correctly. So you want to review that budget really, really frequently. That is something that we can help with. So with that, I am going to let you think about what it means to budget. Again, it's a plan. It's just a plan. Anything, by the way, I do recommend anything that, as much as you can, you should be putting money into an emergency fund. As the owner, at the end of the year, if you didn't use that emergency fund, now you have a lump sum amount that you could spend on Christmas. Or you can take some of that and use it for other things. But at least the money's put aside, and it's better to have it and not need it than the other way around. So that is how to have a budget. I'm sorry, I don't have the really cool visuals. I don't have a camera that can show you how to do that right now, but I will revisit this in the future. And the biggest takeaway from this is don't be afraid to do it. So if you enjoy these videos, please like, share, and subscribe. And with that, I am going to let you go. Have a great day.